Okay, everybody, welcome back to another webinar. You've just got me and Matt today. We've been busy. We've been heading across the country. We've spent some time in St. Louis and spent some time in New York. Matt's in New York right now. I'm in Boston. Wanted to spend most of this time to answer some FAQs that we've been getting from the community. The first one is, what is Aperture and what do we do? I think we go into some good depth on it, but it's probably best to hear it from the horse's mouth. So, Matt, you want to talk a little bit about that?
Sure. So Andrew and Rudy and I founded Aperture in 2016, and we do two primary things. One is that we buy distressed residential properties to fix them up and resell. And the second thing is that we are a lender to other property investors. So we think those two businesses have a lot of complementary overlap. And we have our senior management team. So there's 5 people I'll mention on the senior management team: myself, Andrew, Rudy, who you've seen in videos, Dan Goldman, who you have also seen in videos, and then Pat Fogarty, who's our CTO. So just really quickly, we have a lot of experience in doing these things. So Andrew and I were investment bankers for 12 years each before becoming heads of capital markets at the largest residential flip operator in the country. And then that's where we met Rudy. And Rudy and his team have over 3,000 flips that they've completed in their careers. Dan, who runs our lending business, has originated over $10 billion in mortgage loans in his career. And our CTO, Pat, has built enterprise real estate and mortgage information systems for very large institutions, including Royal Bank of Scotland, Credit Suisse, and Cerberus, another large private equity firm in the U.S. So we're super excited about what we're doing. We're seeing tons and tons of investment opportunities, many more than we have available capital to invest in, and that's one of the reasons that we're doing PropertyCoin, because we can, and of course our product, our methods, our team, our technologies already exist and proven, and so all we need is to grow significantly is more capital, and that's part of what we're doing here with PropertyCoin. We want to share in the success of what we do with the PropertyCoin community.
You hit it on the head. I think that's a great overview, and I think one of the things we like to stress is that we know how to do this. This has been our entire careers, and we know how to run it at scale. So one of the other questions we get a lot is, who owns the unsold coins? There are 21 million property coins that have been created, and so people have been asking, well, what happens with those unsold coins? Who owns them, and how are you guys going to distribute those in the future? Matt, you want to take that one too?
Sure. So the answer is the PropertyCoin community owns the unsold coins. So the management team owns no free coins. In fact, we used our own money. 100% of the employees of Aperture used their own money to buy property coins. That's a very unique feature relative to other ICOs that we've seen. In fact, every ICO that we've seen. So the PropertyCoin community is the owner of these coins, and when additional coins are sold, that produces cash in the same ecosystem for use in buying additional real estate related assets. So it's our expectation that when there is additional opportunity to deploy capital, so when we can sell additional property coins and when we can invest the money from the sale of those additional property coins, we will do so, and we do not believe that will have a dilutive or negative effect on the existing property coin holders. And of course, there's a giant siren right behind me right now. Sorry, guys. This is New York City.
New York City at its finest.
Yeah. But I wanted to make the point that when additional coins are sold, that produces funds for the property coin holder community to buy additional assets, and for that reason, we do not believe that additional coin sales will be dilutive or otherwise negative to the existing coin holders.
Yeah, and it's important to note too that when we buy those additional assets, those will produce additional profits. So it's a compounding effect that's going to happen not only on the underlying asset value of the token, but on the income producing and profit producing potential of that pool of assets. Next question. What is the size of the opportunity and how much could you invest?
Yeah, this is related, right? Because
Right.
what is the size of the total market that we can address and invest in, and therefore that's the reason why we sell additional coins. Do you want to elaborate, Andrew?
Yeah, no, you hit it on the head there. I was going to say the exact same thing. They're so interconnected that the ability of us to raise more money to buy more assets is kind of the beauty of this platform, because it benefits everybody, right? We see a ton of opportunity every day. Our system right now is analyzing over 3,500 properties per day. And I think we've talked a little bit about this in the past, but if we were to even buy the best one of those a day, that would require $20 million of capital a year. So just due to the nature of this business, and these are capital intensive businesses that we're running, it requires a lot of money. And we didn't start Aperture to become a small local regional fix and flip operator or lender. We did this to be one of the largest operators in the United States. Right now, there's really only two players in the fix and fix and flip lending space that are competing on a national scale, and we want to be the third one. So look, we built this system to manage billions of dollars of assets. We're not claiming that we're going to be there day one, but the intent of Property Coin is to provide us with the ability to raise more money when we see the opportunity and when we have the staff and team in place to fully scale it.
And I'll just add to that. I mean, it's important to note we're not only using that money just to buy houses, we're also writing loans to other investors. And writing loans to other investors can use up quite a lot of capital. And after you've written these loans, we have the option of owning them ourselves, which we think is a great investment, or selling them to other people. If we have enough money, we'll own most of those on our own rather than sell them. So that's how, it's those two channels that can collectively use up a lot of dollars.
Next question is, why reinvest the proceeds and the profits versus paying out a dividend? I think a lot of people get confused by the fact that we are actually going to reinvest these profits with into the PCX community, and our goal there really is to provide asset holders and token holders with a kind of an upward and steady and constant pressure on price. If we were to pay out dividends, the NAV or net asset value of the assets owned by Property Coin would remain constant, and there would be no ability for appreciation in the price of the token other than speculation in the markets. And we don't want to provide the market with something that is purely a speculative play. We want this to be a long-term, stable, growing investment for people. And so when we reinvest the profits, it provides that upward pressure on price. And secondly, I think because of the nature of this product and because it's a security token, we have to abide by know your customer and anti-money laundering procedures. So every time we send a dollar out the door, we would have to run a full background check and know your customer review and anti-money laundering review on every person we're sending money to. And obviously the mix of traditional world and crypto world causes some problems with that, right? Once these things start trading in the market, we might not necessarily know who wallet holder XYZ is versus ABC. And so every time we would have to send money out the door, we'd have to request that information. People are going to not give us that information on the secondary market, and so the problem exists of, well, what do we do with that money that has been collected but not yet paid out, because we just haven't been able to collect that information. So it causes a logistics problem.
As we thought through the logistics of that, number one, it caused a lot of work on behalf of our token holders, and number two, if 100% of the token holders don't provide the required information, then what happens? What do we do? Let's just say we've given out the money to 80% of people. What happens with the remaining 20% of the money? And how does that impact token value? So from our end, luckily both kind of outcomes that might have shaped whether we pay dividends or reinvest both pointed to reinvest, so that's what we've done.
All right, last question for the day. What are the benefits of being backed by assets? Matt, you want to snag that one and I'll chime in?
Sure, when somebody invests in assets, it's providing a kind of a floor value to the token. We're going to provide a monthly reporting on, kind of income earned during the prior month, and what the value is per token of properties owned presently. So we think that kind of transparency is valuable to market and how the market sets a price of the token. And then also by virtue of the fact that we're using the proceeds to buy assets, and the assets that we buy are because we expect that they will earn profits. That creates the kind of natural ecosystem within the coin of producing income. So I think those are the primary benefits. And I also think, look, it's interesting that our core business of investing in houses to fix up and resell to others, fix and flip, is not an asset class that people can invest in, to our knowledge, anywhere else. And so that's kind of an additional aspect of value of having asset-backed nature of the coin.
Yeah, so that brings up another question that we've been getting from the community, which is how is the price per token going to relate to the NAV? I think by virtue of the fact that we are publishing monthly reports of the assets owned by the trust, there should be a strong correlation between that value on a per token basis and the asset, so the price on the open markets. It's very predictable. It's very understandable. There's a kind of publicly available report for people to look to. So, we expect and we hope that there's a very tight correlation between those two, and there's obviously the chance for it to dislocate from each other. But our hope is that doesn't happen.
I mean, it could be that the market kind of consistently tracks a price that relates to the underlying net asset value, but and so it wouldn't make much sense for us if it disconnects to a large degree.
So that's it for this week's update. Please keep those questions coming. Check out our Telegram channel. We're adding more and more users every day. We've seen a lot of new users come on and ask great questions. So keep those questions coming.
Make sure to whitelist. That's the most important thing. And look forward to giving you guys future updates.
Thanks, everybody.
Thank you.